All right, a very warm welcome everyone. My name is Nicholas Tan from Kenanga Futures, Sdn Bhd. Thank you for spending your precious time to join our webinar today. It's a joint collaboration with CME Group in our effort to create awareness and provide education on listed derivatives to the participants. We have returned with our nationwide campaign, Accelerate into the Futures. Stand a chance to win prizes worth up to 50,000 ringgit when you trade a Malaysian and US futures contract from 2nd August until 29 October 2021. To learn more, please visit Kenanga Future website at www.kenangafutures.com.my. Please take note that futures and options trading involves substantial risk due to leverage factor and may not be suitable for all investors. This webinar is purely for educational purposes. Kenanga Futures Sdn Bhd accepts no liability whatsoever for any direct or consequential loss arising from any use of the content of this webinar. So before we start, we would like to take this opportunity to invite you to Kenanga Futures next webinar on 24th August, which is next Tuesday, same time, 7:30. It's about trading psychology. Don't miss out, save your date now and get yourself registered. Also, if you have any questions along the session, please feel free to drop your question at the Q&A box on the right side of your screen. And today we have Mr. Kon Hao here, and he's going to share with us about risk management and trading plan. So without further delay, we'd like to kickstart our webinar by welcoming our speaker today, Kon Hao. Kon Hao, over to you.
Okay, thanks, Nicholas. I just want to, before I share the screen, I just want to make sure you can hear me.
Yes, clear.
All right, I'm just going to share my screen right now. Give me a moment. Okay, I think I want to thank you, Nicholas, for the introduction. And tonight we're going to discuss about the risk management and trading plan. I think it's so essential that a lot of us just focus on technique, but without managing it. Honestly, technique, there's work to look for a good trade. But after that, when you enter the trade, you have to manage it. I would say that executing a trade is just maybe about 10 to 30% of the time. But the other 90 to 70% of the time, we have to learn how to manage it. So today, I'm going to discuss about how to manage your trade. But before that, how to derive a trading plan. So this was the core topic for tonight. So I think before I move deeper, I just want to let you know what we're going to study here. We're going to learn about some trading techniques. Later, I'm going to share with you a link how to go to the trading technique specific. But today, I just going to talk that I thought that it'd be good for me to share a little bit more on how to manage a trade. So as I share a lot of pointers or even the link that I'm going to share with you later on the trading techniques, is all based on behavior science. Now, behavior science, what is behavior science? In short, it's called market psychology. You'll be surprised, or maybe it's new to you, that through the study of charts, honestly, when we look at a chart, what are we studying? We're studying into the market behavior of all the greed and fear. So all these are represented there. So this has been my journey over the last 26 years by now. So which I think it was such a privilege that about 8 years ago, I finally stepped out being a full-time investor and I trade. And also during that period, I worked with different partners, Kenanga and different exchanges, Singapore Exchange, but today is with Chicago Mercantile Exchange Group. So it's really an honor and my pleasure. So thank you, Miss Rachel Wong, for having me here today. So I think over the last few years, my company also get into providing an expert witness service and opinion writing for assisting lawyers in arbitration for their trading dispute. So that's what I've been doing all this while. Okay, so very quickly, I just want to get to the topic tonight. We have the next 1.5 hours, but I want to make sure that it's productive. So whatever is being represented here tonight, that you have to understand is based on my conviction, based on my understanding, but it's definitely not a recommendation. So whatever we discuss here, say during the Q&A especially, I hope I can get my live chart up so we can look at the live market as well. What we discuss here base is only for my personal consumption. So if you're somehow influenced that you develop a view from tonight's seminar, say for example, I will really urge you to contact your licensed broker, who in this case is Kenanga Futures. Do contact them. Okay, I thought that it would be nice for me to also give you a outline what I'll be discussing tonight. So we're going to talk on to, I have a breakdown into few parts actually, 4 parts. Now the first part, I'm going to discuss about why about 70 to 90% of the investors and traders, they will ultimately fail in their investment and trading. Of course, for investors, if they invest in US stocks, they should be quite joyful right now because the US stock is hitting the high. I hope most of them are making money, but you also have to take note that sometimes as you make money, you also have to learn how to take some profit, if not all the profit, because when the market come crashing down, then whatever you seems to have paper loss, you're all go down the drain, right? So, which over the last 25, 26 years by now, I observed that why 90% of the people will ultimately fail. So we're going to address this issue is due to because of lack of understanding of exactly who you are, your identity. So as I discussed that, I'm going to give you an animation of why 90% of the community will ultimately fail in their trading. Then we're going to go deeper about profiling yourself. So profiling yourself, what do you mean by profiling yourself is that you have to know who you are, what you want to do in your trading or investment. So once you have a plan, then you really can plan it out how you're going to trade. If not, then most of us will just focus on, I want to make more money. Yes, ultimately that's the reward. But before that, there's a journey. We got to identify exactly what we want to do. Then we can carry out the plan. So this is what I'm going to talk about. Yes, although I say about 70 to 90% will ultimately fail, but please do not be so alarmed by that because I think in education, we try to switch over the 70 to 90% of the community to the other side to become the top 10 to 20%. So I hope that this will help you after this 1.5 hour short sharing. You will not just give some idea, but you give you insight for you to carry out your plan. So this is the first part that I'm going to share. Then after that, we're going to move into designing a trading plan. Okay, so it's not complex, it's very simple, but of course, if you choose to drill in deeper, by all means, attend more webinars, read all the books you can. Of course, you can follow more of my webinars. Yeah, I will share with you some of my contact later as well. So on this part, I'm also going to share with you, the key tonight is how to manage your stop losses. Okay, so as a trader, I'm going to focus tonight as a trader, how to manage your stop losses, because if you can be a mastery in your own stop loss or your own risk, that means you're so good in managing your risk. That means there's no chance that you're going to enter into huge loss or major loss. It means that your loss are always being controlled. Now, as a trader, we have to learn how to manage our risk. Means that you have a mastery of managing your loss. That means the upside is so real because your loss is being taken care of. So that's the whole idea that I hope that that's the key for tonight's topic, how to manage your loss. Then, of course, I also will address that how many lots should you trade? Should you take on each time you see an opportunity? So these are the few things that I would like to discuss about here tonight. Then definitely or as always, during the Q&A, we always have a very fruitful discussion, especially with Kenanga futures. So then after that, the Q&A, Nicholas is going to share with you some trial platform that you can receive some credit and you can literally try and see the result. Now, so after he shared, I will come in to share my last part because then it makes a lot of sense. Once you understand you have this platform, you give your best to try your best ability to trade virtually first. Then after that, I will discuss about how to grow your trading fund. So basically, trading is not just one time or a season. So if you can join me, trading is for a lifetime. So I actively promote that trading journey, investment journey is for longevity. Just now before the event start, I joked with Nicholas that honestly, I think once you started trading and investment, provided you know the know-how, you will want to die with this career. Okay, you want to die in this career. Yeah. So I hope you can join me. It's not a very good thing, but I think it's the ultimate thing, right? Can you imagine you can invest and trade until you find that you're so weak? It's time to go to your maker. I think that's a fantastic thing to do. Now, I just want to thank our sponsor, CME Chicago Mercantile Group, that matched us together here tonight. I think there's 4 parties: Kenanga Futures, myself, yourself, and of course CME Group. So over the years, especially during the 2019, CME have launched this micro E-mini futures, because as the stock indices improve and escalate for US market, things will get more expensive. But I think they have such a good insight that they launched this micro E-mini futures. It make it very affordable for even retailer to participate in the volatility, in the uptrend and downtrend of the market. So later I'm going to share a little bit more as well on that. So it comes so timely because in 2020, January, that was the start of pandemic. So now when the market is volatile and uncertain, definitely futures market or derivative is much welcome. Okay, it will help us to hedge. And if you like volatility, it will help us to trade. So tonight, my focus is about trading. So trading is the instrument that once you want to engage in trading, the instrument that I will go for is derivatives. Okay, now, so I just want to share with you the next 3 or 4 slides here that since launch in 2019, somewhere in May, yeah. Now we could see that the pandemic start in 2020 January. Could you see that the volume just increased? That's also indicate to us that when there's volatility, when there's uncertainty, there's so much need for such an instrument to hedge and to trade. Then who is there are 4 micro E-mini futures here, S&P, NASDAQ, and Dow Jones and Russell. There you could see that the NASDAQ and S&P is the highest volume ever traded. So Russell is nice, Dow Jones is good as well. So later I'll share with you how to trade them also. Because of their success in the micro E-mini outright futures, somewhere last year, August, they also launched the micro E-mini options as well for S&P and NASDAQ. So for those who like to do call and puts, you can look at them as well. So it's a different nature. There's attributes to it as well. So I just want to share with you some good news that in Asia region, since the launch in the third quarter 2019, you could see that, now what is this chart? This chart represents the Asia traders, the Asia community, the contribution to the whole entire volume. You could see that every quarter it just grow from strength to strength. It's that the Asia trader are really growing in community, and I think the CME love us a lot. Yeah, so which is I enjoy trading the CME product as well. So anyway, today the focus is not just about trading, but my focus again for those that just join us is about management. It's about stop loss. A lot of traders struggle with stop loss. Now, when you trade, you have to have a stop loss. Okay, so don't forget that. But if you're investing, you can not put stop loss, that's fine. But when you trade, stop loss is always necessary. Okay. Now, so basically, you could just see the contribution between Asia Pacific. You could see that for Asia Pacific traders, they love the NASDAQ, the tech stock index. So, okay, so between the Dow Jones and Russell, somehow it's just about 7% of the whole pie. But this chart, it kind of give me a sense that, wow, Asian traders, we love the tech stock a lot, or tech stock index, then followed by S&P, and 7% for Russell, and 7% for Dow Jones. Okay, I just want to thank you, CME, once again for sponsoring this event. I'm just going to move straight to the topic right now. And now I'm going to discuss about why, about the community, about 70%, 90%, ultimately when the market crash, they will lost money. That means whatever make, they will see a net negative. So again, I'm not trying to dampen the spirit here, but rather I'm trying to encourage you. I want to bring you from the 70, 90% to the 10, 20%. Okay, so I want to bring you to the other side. So that's the whole agenda for tonight's topic. Now let's discuss about this character here. Her name is Catherine. Now Catherine it represents a large community. I have another 2 characters called John and Benz, but we're not going to talk about them. So Benz are the rich guy, and John is having this contra mindset or gambling mindset. So they are the smaller community. They're the 90%, but the smaller community. But Catherine, I felt that I want to discuss here because it represents a larger community. Now, who is Catherine? Catherine is definitely not a very savvy person in investment and trading, but definitely she is, I would consider her as a mid to high income earner. She's an executive, senior executive, manager, or she can be a C-suite. But she's not from this industry. But yet she knows that as she works until 65. I do not know what's your retirement age here, but down here is 65. Or even before that, because the market is so uncertain, she isn't in her industry, that she know that investment will be needed before she retire, or on the mark she retire, or when a golden handshake is given to her, she need to get involved in investment and trading, because that could be the lifeline. In terms of promotion wise, she's not too sure whether she's going to get any more promotion. So it's a large group of community here is that these are Catherine. And Catherine usually, say for example, she's in a pharmaceutical company, senior executive. So her income is quite regular, quite good. But yet from time to time, she would like to invest. Then she'll call her broker. And she's not very savvy. So she really depend a lot on what people say. She really depend on what she feels that the market experts say. So then she'll place her dollar down on the market. So I would really encourage you that, yes, I know work is hard, but it's so difficult to just save that $10,000. Now, what you should do is that I will really encourage you to spend much time as well in your career. That if you have saved $10,000 to invest, don't invest it casually. Don't just say, my banker say this, my broker say this, then you just buy because this is what he say, it must be good, right? No, you also try to put in the best ability and the time, set aside the time to also be your personal expert in that field, because it's as important. These are your savings. So do your best to understand whatever you can. So today you take the first step to really, as personal professional in this investment and trading, as much as you can. Okay, so today I'm going to address about issue about risk management. So that's one topic. I hope that you will bless you if you are keen to trade. Now, again, the characteristic of Catherine is that she's very busy and she got no time, but yet she want to participate. But when she participates, she really are not savvy into how things work. Now, for her, later I'm going to share with you here is that initially she start off by just wanted to make money. Then later she became a long-term investor that don't make money. Okay, this is how it works here. This is Catherine. Now, Catherine usually she'll look at the price, say, oh, price dropped a lot already. My friend, remember, he said, my friend says it's a good time to buy now, and she bought. After the moment she bought, the market go down and say, oh, it's okay. I will buy some more to average it. So she got some strategy. Maybe the broker recommend her. So market go up, say, see, I'm right. The next moment market come down, she feel a little bit of stress. It broke the new low, said, oh, I never seen this before. So after that, she cut loss. So the moment she cut loss, the market rebounded. Now, this is not new to me. I experienced that before. My wife experienced that before. I think many of us have experienced that before also. Now, so please don't say that you call your broker, you call Nicholas, say, hey, do you think that the market know my stop loss and trigger my stop loss? No, I do not think so. Now, between Singapore, Malaysia, and Asia, in fact, the equity space, derivative space, our compliance are very strict. So for the brokers or the market maker to see your stop loss to trigger it, I believe that is not allowed. Okay, so I believe it's not allowed. So no, I don't think so. But it's exactly the mass market behave. Somehow they are forced into trigger their own stop to cut loss at the low. That's how it works. Now, then after that, as the market progressed, she said that she signed. She said, please don't tell me I cut at the low again. And market progresses. See, I told you market is coming down. Then as it move up, she said, I don't believe this. Never mind, I will wait for it to come down again. I'll buy back, you know. So she's getting a little bit angry. Market still don't wait for her, continue to pump up. Then she get very emotional. Then she said to herself, I think I'm all the while I'm right. All the while I'm right. I better buy now. If not, I'm going to miss it. And guess what? From the first time she bought, now she doubled her volume. She want to make back whatever she lost. But the moment she bought out of greed, the market somehow pushed down. Then for the first time, she said, maybe stop loss don't work. So I don't put stop loss. I don't have cut loss. I just hold. You'll call Nicholas. Then you ask Nicholas, is this a good company? Then Nicholas said, yeah, it's a good company. Although Nicholas is derivative, but just an example. That he said, yeah, it's a good company. There's a good pay good dividend. I think I should hold. So that's what I mean by a lot of us from short-term trading became a long-term investor, became a value investor. And a lot of us fall into this category. So after that, you say, well, anyway, I think it's a good stock. I will continue to hold. But the more you hold, you do not know about the fundamental development. The market continue to sink. Then she said, I cannot believe this. So I hope that this demonstration will speaks to you. When I present this, I receive many emails from time to time. You say, thank you, Kon Hao, that this is who I am. Okay. But again, I'm trying to shift ourselves out from this and move into somewhere and someone that's a little bit more savvy. But as you shift out of it, as you examine the market, please read into the emotion of Catherine as well. So once you can read into the emotion of the mass market, you will also develop a skill to get into the market with more precision, with more confidence as well. So instead of you being the mass market, you step away, look from the above, and study the mass market. So that's my whole point here. Okay. So, but now we're going to move on to the first part of this series here is that tonight I'm going to bring the 4 parts. The first part is to really to understand, to know about yourself, to have an identity exactly who you are. Again, there's a football coach ever said that if you fail to plan, you plan to fail. That means you must have a plan. But before you plan, you must know exactly what is it all about. When I see an opportunity in this particular market, you have to start to plan, is it for long term, short term, very short term, or is it intraday? So you have to categorize it. Is it for long term, short term, very short term, or for intraday? You have to know, because once you can identify this market is for what, then you're able to plan accordingly. Now, very quickly, is that basically I break down into long-term investor, short-term investor, short-term trader, and intraday trader. So today, I'm going to focus on the lower quadrant on short-term trader and intraday trader as well. Now, very quickly, I just want to share with you the term. Now, what I mean by term, the holding period, means that when you see a market opportunity, when you want to buy or sell short, say for example, you have to quickly derive how long you want to hold this in the expectation that you're going to see reward. Okay. Now, so if you're going to be a long-term investor, I will classify that is the holding period is between 3 years to more. Okay, but I'm not going to focus on long-term investment today. Now, short-term investor is this. The holding period is between 3 months to 3 years. And short-term trader, the holding period is between 2 days to 3 months. Again, what do you mean by holding period? It means that when you see and study a market and an opportunity arises, it means that when you get into the market or before you get into the market, you need to start to plan. If you say you're a short-term trader, that means my expectation for the market to see result, I'm entering right now or I've entered right now, my expectation for it to see result is about 2 days to 3 months. Okay, so why 3 months? Because most of the structured product, including derivative, they have a lifespan up to 3 months. That's how I define 3 months. Now, where did I get all this material from? Is really through observations. Over the last 26 years, I observed different institution, retailer, a few thousand of them. And I just come up with this because I look at the market is so much chaos, but chaos is good. It brings forth opportunity, but also try to compartmentalize what is this all about. Now, then who is traders? Traders, basically intraday trader means that your plan is get in today. By time the market close, your objective is to get out. You have no plan for tomorrow, which is fine. These are called intraday traders. So these are the 4 categories. And very quickly, I just want to move on into this part. Now, if you're a short-term investor, now notice that I say that likely stock will be a good instrument and can consider futures and derivative. Now, because most of the futures will expire within a month or 3 months period. So if you have objective to buy and hold or sell short, buy and hold in this case, that means you want to hold for at least 3 months, about 3 years. Now, futures is not suitable. But having said that, you can use futures or derivative as a hedge. Say, for example, my stock got stuck, market come down too fast, but you believe that for the next few months, the next few weeks or rather, the market will continue to slide down. So how can you hedge or protect your position? That means you continue to hold on to your stocks and you sell short of futures. That's how you buy insurance, something like this. For if you want to know all about all these strategies, you can always give Nicholas a call. But okay, tonight I want to focus more on this lower quadrant about the risk management for short-term trader and intraday trader. Now, short-term trader, it means that your holding period is between about 2 days to 3 months. This is what I call a short-term position trade. Okay. Now, if you're a short-term position trade, your holding period is between 2 days to 3 months. Now, if we analyze chart, what kind of a chart should we look at? Because you are 2 days to 3 months, you could consider 60 minutes chart, 180 minutes chart, daily chart to maybe weekly chart as a reference point. Where's the main trend? So these are the time frame that you can look at. But if you were to be now, like what I say, but before I move on intraday, here's that derivative will be the key instrument and can consider stock. When I have a idea about a market, if it's a stock, I do not participate in the stock if I have an idea about 2 days, 3 months, because you have to understand that every instrument are designed for a specific purpose. Futures, derivative are for short-term trader. So usually if I have an idea about market, it's just about 2 to 3 months, I will deploy futures. Now, going to intraday is this. Within the day, definitely I will just go for futures. I will not consider stock because stocks are not made for intraday trader. So this is based on my experience. Now, whatever I share with you, you may not agree with me totally, but I share out of my experience. So it's good to have differences, but it's always also good to always share in this community. So now, if you're an intraday trader, I will strongly encourage you to engage in derivatives. Why? Because the instruments are made for traders. Stocks are not so efficient. They are for investor. Now, realize the upper quadrant and the lower quadrant. So I hope that I give you this classification that you were able to identify exactly who you are. Then if you ask me this question, maybe now you're asking me, so Kong Hao, exactly who you are? I'm all for. Okay. Now, before you get the experience to become all for, you take one part. If you know that you're not that savvy, you choose one part first. You experience it. Then as you get an idea what this is all about, you can be all for. Different opportunity will surface differently, but you try to have 4 different portfolio as well. Okay. Means that if I'm really free, I have the time and market allows me to trade intraday, I will trade intraday. Not all the time I will trade intraday. Sometimes, most of the time, the market will have the opportunity for me to trade intraday, but that doesn't mean that I have the time to devote myself to trade intraday. So that's very important. You have to manage your lifestyle. Okay, let's move on to this. I'm checking my time constantly because I want to finish my segment by 8:30. Then after that, I want to discuss about how to grow your trading fund, starting with 3,000 ringgit or 10,000 ringgit, how to grow that. So I want to spend the last half an hour to talk about this topic about how to grow your trading fund. That's towards the end. Now let's design a trading plan. I just complete the first part that I discussed about the mass market behavior. So I hope that you can cross over to be the 90% to be the 10%. You know, it will take a while, take some time, but before you find your way, I hope that I provide you a structure how to find the way, know the profile, to get a sense exactly who you are. Let me just go back to this. There's this link here. You can just go to Weipedia.com, trade type analysis. I have this 10 question. You can try to answer it. And this 10 question, then later on, you can tabulate the numbers and you can find out internally exactly who are you. Are you more of a long-term investor, short-term trader, or intraday trader? So I hope that will help you. Okay, let's go to designing a trading plan segment. Advancing in trading. Then after that, I'm going to share a few. Okay, first of all, I'm just going to share with you the simple trading method. Am I going to share with you that later on? Okay. Now, when I say advancing in trading is this, we go back to the very basic. Now, it's so basic that you can laugh about it, but I can tell you that yes, you can laugh about it, but if I'm going to ask you this question right now, you may not know how to answer me. Okay, it's the trading basic. Now, if I'm going to ask you that, can you define what is investment? Now, most of us have an idea how to define what is investment. You would define that investment is something like this. I'm buying into good value assets over time, given time. I hope that you will appreciate. So it's very clearly defined by yourself that you know how to define investment. But let me try this, which even the long-term trader also failed to answer this question. Now, I want to take a few moments to answer to yourself. Of course, I cannot hear you. Now, I'm going to ask you this question right now. Take a few moments to think about it. Can you define specifically what is trading? Give yourself a definition is what is trading. And I know that you're going to struggle with this question because I try it from classes to classes and all of them say, oh yeah, I know how to define what is investment, but how to define what is trading? Okay, I'm going to give you about 10 seconds to think about it. How to define what exactly is trading about? Can you define it? Okay, now I've been to Malaysia. I traveled Malaysia before the pandemic for a few years. I tried this in different classes. All of them find that it's such a struggle to define what is trading. Now, some will say it's buy low and sell high, and vice versa. Some will say make quick profit. Some will say trade and know how to cut loss. And some will say it's a high frequency trading, so on and so forth. I'm sure that many of, if I collectively get all your inputs, I'll get all these also, because these are being collected and more. But exactly, is this how you define what is trading? So when I ask the traders or traders want to be, can you define what is trading? They find that they struggle with defining what is trading. Then I say, how could you not able to define what is trading before you get started? So it's the most fundamental, it's the most basic that you have to know what exactly trading is before you get started, so that you will have an idea what is it about and what you're trying to achieve. Okay, I'm going to share with you my idea what is trading. Now, if you're going to look at the dictionary, you can go and Google about what is trading. The dictionary will say it's a transaction between buyer and seller. That's a very technical definition. Yes, that's called trading, a transaction between buyer and seller. But in our term about trading, the market, is that how you define what is trading? No, okay, these are transaction between buyer and seller. It's just a very technical term, it's an English term. But trading in the financial market, what is it all about? I'm going to define what is trading right now, and I hope that it's going to give you a very good clarity moving forward, starting tonight, that you know exactly what is trading and you're going to start it correctly. Okay. Now, first, I'm going to give you this demonstration. Now, again, these are for illustration purpose. No one can achieve this result, but I hope that this demonstration about compounding will give you an idea what is trading all about. Okay, now the illustration is this. Now, imagine if you have 1 cent and you have the ability, now, for example, you have the ability to make 1/4 return every trade or every day. You have that ability. Through hard work, okay, you have the ability to make 1/4 return. Now, can you make a guess what will be the day 31 result to be, starting from day 1 with 1 cent? You have the ability to make 1/4 return every single trade, every single day. Now, so 1/4 return means that double. 1 cent became 2 cents, 2 cents became 4 cents, 4 cents became 8 cents. Okay, now, can you tell me what will be the amount of day 31? Make a guess. Okay, try. Okay, so I do have the chat box, so Nema, I just want to move things a little bit faster. My whole idea is to give you an idea what is trading all about. Get started correctly, then I will start to share about trading techniques. I'll bring you the link so you can watch it after the session. But more importantly, later on, I'm going to share with you how to manage your stop loss. Now, so day 31, you'll be surprised that as it rolled, it became $10 million. Now, again, I'm not suggesting that any one of us at this point can do it, but it's a demonstration. What can you see from here? What can you see from here? There's a few things. Okay, very quickly, I just want to give you this idea here is that Now, in trading to me is this. It is to achieve a consistency in my performance. Now, performance, it refers to profit and losses. Now, it means this. Now, day one to day two and every day at every trade, this guy can make 1-4 return. I don't have that ability to make 100% return every single day, okay? But it's just for illustration purpose. I'm just going to bring you to this point here is this. Now, can you imagine that if every day or every trade that you can make just about 1 to 2%? Now, that's trading. Trading is a lifestyle because trading are generally short term. I don't expect myself to make 30-40% all the time for one trade. I don't expect myself to if I find a great opportunity, I roll in heavy, I leverage to the maximum I hope I can double my account over the next few weeks. No, I don't think so. It will be very stressful for me to do that. But let me just share with you an experience about trading, about enjoying the volatility every single day, every time. Okay, enjoying the volatility every single day, every time. Every time you have time to trade, you got to enjoy the volatility because the volatility is always there. Now, how trading works is this. Volatility is always there. My job is to participate in a given volatility each time as good as I can, as equipped that I should be. I participate in a given volatility every time. So my expectation of earning from one trade. Now, this one trade could be intraday, could be a short-term trade. Remember, the short-term trade I'm referring to from 2 days to about 3 months. Now, so you have to get this right, is that these are shorter term holding period. So if you're going to make a few false return, these are unrealistic expectation. Some of you may make one time, but these are just one-off. And if you make that before, you realize that it's so much stress that you have to go through. Then what's the joy about trading? Trading should be enjoyable. Trading should be every day you wake up, there's no stress. You look at the market. If there's opportunity, you decide how many lots you want to trade. And even you trigger that, you're in position, even go against you, the stress should not be there. Okay, it should be minimal stress continuously, and you just enjoy trading. You just enjoy seeing the growth of your account. You just enjoy having the market with you every day. Look for opportunity. So this is trading all about. Now, again, what should be the expectation of earning from trading is this. Now, for example, if you have a $10,000 account, US dollars, ringgit, or Sing dollars, it doesn't matter. These are just numbers to me. If you have $10,000 account, say for example, or if you have $1 million, go ahead. Doesn't matter. To me, it's no difference. It's just numbers. So later I'm going to share with you how you grow an account using mathematics. It's just mathematics. Once you understand, then you have a vision to carry out this campaign. Now, so what you should do is this. Imagine you have $10,000 to start. Each trade, each day, can we just focus to make 1 or 2% of your trading fund? Now, if you have $10,000, if you make specifically 2% each trade, say for example, you're as good as you can be, each trade you can make about 2%, means that each trade, $10,000, 2% of $10,000, how much will that be? That'll be $200. So if I have $10,000, my focus is just to make that one trade. If I make about $100 to $200, that's good enough for me. So after I clear it, the next moment I say, what's next? Where's the next opportunity? I want to be collectively continue to collect that 1 or 2% each time. But similarly, if I'm wrong, I also want to risk manage to 1 to 2% loss. Means that with $10,000 account, if I know that if I make a mistake, a wrong judgment, that it always come, I'm just going to risk about 2%. Means that with $10,000, each wrong judgment, my loss is 2%, which is $200. But I try to focus, I try to be as skillful, or I want you to be as skillful as you can. Make more of that 1 or 2% and make lesser loss of that 1 or 2% loss. So over time is accumulative, you can amalgamate over the month. You'll see a positive result. So every month, you just continue this journey. I hope that you'll give you some idea what is trading all about. So going back, how I define what is trading is this. Now it makes a lot of sense now, okay? It is to achieve a consistency in my performance, including losses. Means that if I try to make more of that 1 or 2% and make lesser of the 1 or 2% losses. So over time, it makes sense. So does it make sense to you right now today is that how I define trading, how you should define trading is that our job is to really be skillful as we could be, and to achieve a consistency in our performance. That's all about trading. Now, this is based on my own definition, based on my own understanding. I hope that you will bless you. But if you can also, based on what I've just shared with you, my experience, to redefine a definition about trading, because once you understand about trading, then at least you have a blueprint how to walk this journey. Okay, so this journey is exciting, it is fun, it should not be stressful. So later I will share with you how not to be stressful in trading, how to upkeep yourself in reaching that performance, so which is very important. Now, then, of course, that demonstration also illustrates there's a power of compounding effect. There's a power of compounding effect. Okay, now, yeah, I talk about advancing in trading. Sounds like a big word, but then after that, you must be disappointed at first, because then I asked you to define what is trading. But you're stuck. So you're stuck. You do not know how to define what is trading. But I'm glad that I'm able to bring you through to define what exactly trading is all about. At least we got started correctly. Now, once you have this, I believe that at this point you have good idea how to get started. Or if you've been trading for a while, but you find that there's so much resistance in seeing a performance, then I hope that will give you an idea how to get started correctly again. Now, then when you trade, you also have to trade. Let's say you're skillful in studying the market, okay? But you also have to be skillful in selecting the right contract size for yourself right now to get started. Now, what do I mean by that? Now to me, whether S&P, NASDAQ, Russell, Dow Jones, crude oil, gold, all these are just market. To me, once you're able to read into a chart, once you're able to read into the behavior, to me are just market. Then the rest are just contract size. Now, contract size matter is this. Now, I'm going to share with you one or two examples, because all the rest of the market, whether is it oil or gold, crude oil or gold, commodities, to me, they are all the same. It moves the way it moves the way that we can recognize then there's opportunity. But then after that, you saw opportunity, you have to understand the contract size, because the contract size matter that each of us, we have different capacity. Doesn't mean that we can take on NASDAQ if we want to, but we may not have the capacity to take on NASDAQ. But exactly with micro E-mini futures today, many retailers can take on most of the market. Okay, let me give you an illustration how to understand futures and derivatives or derivatives. Now, for micro E-mini S&P, you have to understand that what is the most minimum point movement. The most minimum point movement designed by the exchange is that is move minimum by 0.25. There's a worth to it. It worth $1.25 US. So if I convert to one full point, you just ship out decimal or times 4. 0.25 times 4 is 1. So it means that 1 point is $5 US. So I reconfigure this. So it means that 1 point is $5 US for micro E-mini S&P. But whenever you see, as of now, say for example, the price is at 4450. Say for example, now it's 4450. Whether you buy into it, expecting the market to go up within the next 2 days to 3 months, or you believe that the next 2 days to 3 months, the market is going to fall, and you do a sell short. Now, the thing is this. You have to understand what are you holding overnight. Yes, there's margin. The one is, let me just put aside, but more importantly, you have to understand what is this baby you're carrying overnight. So you have to carry something that you can sleep with it. You cannot carry something that you feel so anxious, so angsty about how's the market is going to be. You feel very anxious about because you have a position. It should not be that. Okay. Now, so 4450, since 1 point is 5 US, 4450 times 5 is equal to 25,250 US dollars. This means that when you engage yourself a position, whether to long or to sell short at 4450, you are in fact carrying a basket of 500 US stocks worth 25,250 US dollars. So you got to ask yourself, are you okay to carry this 22,250 US dollars overnight? Are you okay to do that? It's a basket of 500 stocks. Means that it's not one stock will be dangerous, but a basket of 500 stocks is a average of 500 stocks. So in the possibility that this stock will default, in my opinion, with 500 stocks, it's not possible. The S&P will just default, right? Yeah, but if you buy one individual company, that may happen. So, but truly, if I'm going to access that opportunity, if you're going to buy one micro, it's worth 250,000 US dollars, 22,250 US dollars. Personally, I felt that I'm comfortable with it. I may want to buy 5. I like $100,000 worth of holding overnight. So I may buy 5 micro E-mini. But if you're not comfortable with 5, you're comfortable with 1, then start with 1. Okay, so but even you're not comfortable with this contract size, you can try something smaller, which is Russell. Okay, Russell 200. Like what I say, once you understand, you develop the skill to understand about charting, understand about behavior. To me, these are just market. But when you select a contract, make sure that you select a contract that is comfortable size for you to take on, that you can sleep with. Okay, so you should not be having anxiety that you're holding a position. You're not sure where the market will be tomorrow. Okay, so you should not be that. You should be comfortable. You should be confident that you have done your work. The size is not too heavy. It's a good game. It's a real game to play. But my objective is that I want to see it grow. Okay, even if I'm wrong, it's okay. I will manage the risk. I will cut loss based on my account size with 10,000 US dollars. Say, for example, my loss is at max 200 US dollars. I can stomach it, say, for example, as such. Now I'm going to move on to a simple techniques on market entry. Now, like what I say, because today I want to focus on stop loss, I will bring you to the other side where I've done this with CME. I spoke about how to identify market reversal using hammer. And it's not just ordinary hammer, but those hammer that carries high weighting. Means that those hammer that worth look at and decide whether you're going to take on the position or not. Okay, so if you can, please take a screenshot because I'm going to flip it very soon. Maybe after this webinar, the next 1 or 2 hours, you have the time, or before you sleep, or maybe your spouse falls asleep, that you may want to enjoy this program for the next 1 hour to study how to have a precision entry. Okay, so of course, from that, if you want to continue to expand your knowledge, just go ahead. You study all you can, get reference book, or you can continue to follow through with this program also. Okay, I'm going to flip to the next chart. 3, 2, 1. Okay, so now imagine you have the skill to recognize changes. Okay, now, so during this period, even today, for US market has been on a growth market or uptrend. So now, as a short-term trader means that my position holding is about 2 days to 3 months, right? Now, so I have time to do that. So usually I'm a short-term trader. I wish I enjoyed that. Now, but you have to recognize the main trend. The main trend right now for US market is growth, uptrend. So I will try to avoid sell short. That doesn't mean that I do not do sell short. I will try to avoid. But recognizing the trend is uptrend, my focus is always look for dip. When the dip comes, I will narrow down to where is the buying opportunity. Say on this day, on 6th of March, I recognize that there's this bullish engulfing body, which is really nice, and followed by a hammer. Okay, so I have a chat group, so I give it this case study to the chat group. That's where we discuss about it. Then I showcase this. Every week I will showcase a case study. Okay, so this week I showcase about gold. I think gold is very interesting. So if you like to look at gold, you can talk to Nicholas how to engage yourself in gold. Look at the weekly chart. I felt that the gold hammer, there's a hammer formation last week. It was really interesting. Okay, now let's go back to this. And I shared with this chat group that the US market is still moving south. I analyzed that the main trend is still up. Therefore, I view that market as a retracement and looking out to buy on dips with a measured risk. So I say that the case study demonstrate a biting point on buy dips. So after that, this was how it looks and the market go up. Now, the thing is this. So all this contract size that I mentioned earlier, the micro E Dow Jones, 1 point is 50 cents US. Now, this swing, it took me about 1 month. Now, 34,800, that was a high. Entry point 31,000 times 50 cents, and that will be your, I will consider that as a net profit because the derivative commission is quite negligible. If unless you're an intraday trader, then that's a consideration. But if you're a position trader, the commission to me is not really a consideration there. Now, so this how to calculate, just a very short demonstration. I'm just going to move on, and I'm going to talk about managing stop loss. I'm just imagine that you have this skill to get into the market, not casually, but when I say you have this skill, I just imagine that you have, you're proficient enough, you're skillful enough to identify for opportunity. Okay, like for example, like this. So earlier we talked about bullish engulfing body. We also talk about hammer. So these are precious reversal signal to me. Now, earlier I say that before I come to this topic at the beginning, I say that we try to be a mastery with our stop losses. Now, what do you mean by be a mastery with our stop losses? It does not mean that the stop loss will not hit us. It means that the stop loss will still hit us, but each time when it hit us, it's very controlled, it's very measured, it's very calculated, and max is only about 2% of our account. It means that I still have another 50 chance to continue to make this mistake, which is, no, sorry, it means that you still have another 49 chance to make the similar mistake. Now, so can you imagine that if you are a mastery of stop loss, means that you're so skillful in managing your risk that most of the time is lesser risk, means that lesser stop loss, but most of the time you make money. But each time you also make about 1 or 2%, but sometimes as the market trend up, you will make more. But each time when you lost about just 1-2%. So it does make a lot of sense. So I would really urge you to try your best to focus on managing your risk. Once you are expert, can you imagine that now I'm going to empower you with this message here is that you are going to be an expert in managing your risk. You are going to be an expert in managing your loss. It means that at no time it will cause your account to burn a big hole. That one will be the past. Now, can you imagine if you could do that, then the rest will be easy. It means that you make little by little add up. Even when the loss comes, it's not going to burn a big hole in your account. So that's the point about trading. So I just want to enjoy the journey, but let me give you one demonstration here is this. Now, there's another example here that on the 20th of July, just about less than a month, I saw another buy and dip opportunity. I share with the group chat here. I say that the following S&P 180 minutes chart represents a biting point. It means that there's either a hammer or bullish engulfing body, and that was on the 20th of July 2021. We see a very nice bullish engulfing body. So now the thing is this. After that, yesterday it hit the high. Okay, now, so I want to go back to, let you just appreciate a little bit. Okay, so it hit the high. This was prepared on the 10th of August, but as I update yesterday, it go up even higher at 4476. Now, how to manage your stop loss is this. Now, I just imagine that you already have the skill on entry, say for example. That means you recognize that this bullish engulfing body was very good. You believe that this low, it should be the low. I cannot say that it is the low because nobody knows. Nobody knows. So we just try our best ability to find the probability that highly likely that I think have this idea that I think and I believe that the low has established and moving forward, it will bounce up. So that was the point where I shared to the group. They can take a look. Then now, say the next flip of 180 minutes, you decided to enter here. Okay. Now, so means that the next flip, the next opening price is at 4263. Now, I also believe that the low is at 4224. My belief is that I do not think that it will break this low anytime soon. But highly likely, I think it will bounce up. So you recognize the opportunity, you measure the probability that likely it will go up. Now, what you should do here is this. Now, the stop loss is that I would like to buy here. That means the next period, I buy at the opening at 4263. And I'm going to put one tick lower. Since I believe that 4224 is the low, I do not believe that you'll break below and retest. Highly unlikely it will not. But just in case it do, then I risk manage it. So I put 1 point stop loss at 4223. Now, so Now, how to do a stop loss is that you take your entry price 4263 minus 4223. Now, 1 point of micro E-mini S&P, it is $5. This times 5 is $200. It means that before you get into the market, you do your sum first. You do your sum that one lot, one micro mini, if I take on here, if I stop loss here, how much is it going to cost me? Okay, so now it's going to cost me $200. Now, does it make a bit of sense to you today? Now, if I'm going to base on this theory where I have 10,000 US dollars, I see this opportunity, and each time I will only allow myself to risk 2%. So were I able to take on this trade? Definitely, I will take on one, because in the event that I make a wrong judgment call, stop loss got triggered, so I lost 200, and that is just equate to 2% of my trading fund. So it does make sense to you, I hope. Now, then the next thing is that, then how many lots should I trade? How many lots should I trade when opportunity arises? Now, the thing is this. You know that one lot potential is 200 US dollars. It really depends on your account size. If your account size, say for example, is 10,000 US dollars, then if you want to adopt my strategy that each time loss, I just want to lose about 2%, then go with one micro mini lot. But it's up to you individually. If you find that it's too slow, too painful, you want to see a quick growth, whatever works for you, but I hope that you can draw some idea from what I do. But make sure that if you want to trade 2 or 3 micro mini lots, you have to know where to stop loss. And you work backwards. What is the percentage loss overall? Okay. So again, I say that trading should be a lifestyle, that it should be, I would say relaxed, but it's enjoyable. That it should not at no time that cause you have so much anxiety that it cause a change in the lifestyle. That if you have a meal with your kids, your mind is in the market, not with your loved ones. So I think then that's wrong, isn't it? Yeah. So how many lots you trade, it really depends on the account size. You work backwards based on one lot first. You always calculate based on one lot. What is the lot? What is the loss in quantum? Then you decide how many lots you want to trade. Now, just to share with you what is the potential profit when you get in here. Up to yesterday, it was this amount. Okay, so you look at the risk reward ratio. Of course, to perfect the skill of getting into this market, I hope that you continue to build up this skill about entry, but also as important, if not more important, about risk management also. Okay. Now, so with that, later on, I'm going to continue to talk about how to grow your trading fund. So I just addressed this issue about how to stop loss, how many lots you should trade. So after the Q&A, Nicholas will share with you the trading platform. Then I'm going to, after the Q&A, no, I think we should go to Q&A first, right? Yeah, maybe we'll just take about 2 or 3 questions. Then Nicholas will go to the trading platform. Then I'll come back to you to share with you the last segment on how to grow your trading fund. Okay, so before we take the Q&A, maybe just take about 2 or 3. Then we'll come back again. We can take more questions. You may want to consider to scan this from CME. It's quite an awesome website where it's called the Fresh from Trading Room. Now, what is this all about? I just received this yesterday. Was it yesterday or today? I can't remember. So anyway, what is this all about? Expert analyzing, helping you to turn market information into insights delivered directly to your inbox twice a month. Okay, so it's free. So if you can, just go and subscribe to it, get some ideas. Now, the next thing before I go to Q&A, do like my Facebook page. Is my name, Con Hao. Join together, like or follow it. Every day I'll post a few things. Okay, it can be a market opportunity or a market insight. Okay, or a market outlook, or my own writing. So do like or follow it. And okay, so this CME trading room, for those that you missed that market entry for reversal. So this is a QR code. So any question what I've discussed tonight, you can always email to me at conhao@weipedia.com. conhao@gmail.com. Then you can visit my website. There are some more resources. I hope that all this webinar that I've done, I will also upload there so you can get it for free also. Okay. So this is my YouTube and Instagram. You can follow it, called Weipedia. Okay, with that, maybe we'll just take 2 or 3 questions. Then we go to the platform. Then we come back. I will finish up the last segment. Yeah. So Nicholas, do we have maybe just 1 or 2 questions?
So far, do not have any questions yet.
Okay.
Yes. All of you, you have any question, you can post your question at the Q&A box.
Okay, maybe what I will encourage you to do is that just to save time,
Yeah.
while Nicholas is presenting the platform, any thoughts, suggestion that you want me to clarify intraday trading, short-term trading, you just send in your question. Then after Nicholas presented, I will do my last sharing segment on how to grow your trading fund. Then we will take on your question. So maybe I just hand this time back to you, Nicholas. Yeah.
All right, sure. Okay, so if you have any question, please post your question in the Q&A box. We are waiting.
Okay, maybe I'll take this time to also share the last part.
Yeah, sure.
Yeah. Okay, I think I really encourage to see that you participate. The things that I could see that I think there's about top 4, top 5, you're in the green. In the black, right? It means that you're making money, and the top guy I think make about 18%, right? But in reality, within a short time, can you make 18% of your trading fund? I think definitely you're taking with $10,000 means that within the last 10 minutes, you make about 18% means at $1,800. So I think that's very outstanding, right? But in reality, that means you're taking a huge risk. But the thing is that after this session, I will encourage you to continue to use Kenanga platform to try out. But this is what I want you to do, right? That means when you try out as serious as you can. Because usually for trial account, you realize that you can perform quite well if you're very serious. Or you're not serious, you can perform quite well usually. Yeah? But when it comes to actual account, where real money involved, you find that, hey, the result is maybe fall short quite a bit. What is the reason? Is because there's always emotion tied to it. When it comes to trial account, the money is not real. Then you have a certain view. You just, maybe at the point in time, there's some losses. You say, never mind, don't care. Wait until it bounce up. So you have this luxury to do it. But in the actual account, because it's your real money, so emotion will put into your baggage. But what I'm trying to do here is to encourage you, continue to try on this trial account. But each time you try on the trial account, be as serious as you could. Later I explain to you how to grow the trading fund. As serious as you could means that every time you identify, you could go to that free link I give it to you, go and study about what do you mean by identify those hammer that have high weighting. Go and study on that. Then throughout, every time you try, you also engage yourself in a stop loss if you can. Okay, be as real as you can. So after that, you test your own performance, you see how good you are. Then when it comes to the actual, right, in the same measure, you also do the same. Because like earlier I said that trading is about mathematics, about percentage. Doesn't matter if you're at 10,000 US or 100,000 US or 1 million US, which I'm not impressed. But even you have $1 million US in your trading account, if you can perform each trade, you can clock about 1 or 2% growth accumulatively over time. Whatever amount, even with 3,000 ringgit, you still can do that. I will be very impressed. Okay, so now this is how it works. Now, of course, with 3,000 or 10,000 ringgit or 10,000 US, let's say on the context of 3,000 ringgit or 10,000 ringgit, then I think we'll narrow down to Russell. So Russell, the margin is about 715 US dollars. That means it allow you to trade one micro Russell. Like earlier I said, all the movement is identical, similar. But do polish up the skill to recognize reversal. It's very important with a calculated stop loss. Then choose the right contract. Now with say 10,000 US, I will still recommend to trade Russell 200. Trade something small because what you want is to see your growth, your performance. For a start, the objective is to see performance. That means you try to clock every time 1 or 2% growth. Risk also 1 or 2%. That will keep in check. Then, of course, the other contract I think Kenanga is going to include very soon, where I just emailed Nicholas this afternoon, is micro crude oil. I know Malaysia love to trade oil. So crude oil, what is the value? Just now I said the contract value, right? So the Rasa is 11,500, which is much smaller than Rasa. So crude oil is even smaller. That means you're really buying literally $7,000 worth of crude oil. So do check with Nicholas. Like what I say, the performance will be the volatility actually very similar to spot for those opportunity. I hope next week when I share, I no promise, but I hope that I can share on crude oil. Next week I'll be sharing about trading psychology. I hope, okay, I'm still preparing for it, that I could include crude oil into my demonstration as well. Okay, so again, just now I say that the objective for once you get started, that means even trial account or the real account, you got to be trial account, you got to be as serious. When it comes to real thing, it should be the same. Okay, so the objective to achieve consistency in a performance. When I say performance, it will result in both profit and loss. Then focus on the compounding effect. So let's have this challenge. I challenge you. This in a context where there's no loss, but I just want to give you some idea what is the power of compounding. In a context there's no loss, which is not possible because once a while we have loss. But let's say in the context of no loss, each month there's trade about 20 to 22 trading days, right? Like if you start with 10,000 ringgit or 10,000 US dollars, like what I say, the amount to me, it doesn't matter. Each day you make 2%. Okay, 2% on the first day or the first trade will be 10,202, and things just add up. Say second day, third day, or second or third trade. Then on day 20th, if you just keep on compounding, that means each trade you just make about 2%. You'll see that the growth is, I'm not too sure whether that will impress you, but to me, there's a 40% growth. That's really a lot, okay? But if you're able to continue this lifestyle, okay, continuing lifestyle, so 2%, is it a lot? No, it's not a lot, right? But it's also not little. If you lost 2%, is it a lot? Also not a lot. It won't cause so much pain and heartache. So therefore, I say it's quite fun. So this will be a challenge to you if you can do that. But of course, in reality, there'll be plus and minus. So if you continue your lifestyle, let's say this will be month by month. So there's next 12 months for you to try this. So if this thing add out on a no withdrawal basis, so I just want to showcase by mathematics it can be done. Of course, this ideally can do it. It's not impossible. Okay, it's too perfect, but it's not impossible. Let me share with you, it is not impossible. It can be done. But that doesn't mean that I'm not trying to represent you a false signal that it can be done, but it's not impossible. So you just focus, because every time when I present this compounding, it really let me remember the beginning of the journey. So it just gives me a lot of flashback about the good memories, the struggle are good memories. So I hope that even today I look at it, it became a strength on me. Yeah. So our past struggle today will be our strength. So this one, I just want to encourage you that know the mathematics, that it can be done. Of course, these are perfect demonstration. The reality be plus and minus, but you focus, because sometimes you may able to make more than 2% because the trend, you may pick on the right trend. Okay, like just now I shared with you on the July and the March period, happened to turn around. It was a perfect trend. The risk reward are just fantastic. So these are not all the time will come, but once a while will come. So I think all these are being archived. There's a video being saved. You can rewatch the whole program again. But do join me next week on next Tuesday with Kenanga. I will be talking about trading psychology. So in case you miss out the QR code, these are the QR code. I'm not too sure if we have time for question. Maybe if there is any question, we'll just take one or two.
I think it's okay so far. I think all the participants don't have any questions.
Okay.
I think we can just bring up from here.
So I want to thank you all for staying through. Coming to more than 1.5 hours, just amazing. Yeah. Thank you so much.
Slightly. All right, so thanks everyone. Should you have any further queries, please feel free to drop us an email at futuresmarketing@kenanga.com.my. We appreciate you being here tonight and hope you enjoy the webinar and also game. Please take a minute to read our webinar, and your feedback is highly appreciated. The feedback link is on the chat box over there. Again, do remember to check out our Kenanga Futures nationwide campaign, Accelerate into the Futures. prizes worth up to 50,000 ringgit are ready to be given away. Thanks you everyone for joining us, and please check our event on Kenanga Future website for more rewarding and informative activities. So we hope to see you again at our next event, which is next webinar, which is next week. So stay safe everyone, and see you next week.
What are you clicking?
Click KenangaFutures.com.my, Malaysia's leading derivatives broker.